an at-the-money call when the stock reaches a resistance point, and buying a put one strike below the strike price if your prognosis is bearish. Wouldn't this be a risk reversal? Yes, it would. That's exactly how you would be able to lock up some of the possible profit that you achieved in your stock. One of the better stories I could tell you about that I really enjoyed was Mr. Cuban, who you all know owns a sports team and is bidding on another one. When he sold his company and he got stock. He got Yahoo. Well, what he did was, because at the very beginning of restrictions to tenders related to giving others stock, they didn't include stock options or options as a restriction to him. So he couldn't sell the stock out in Yahoo, but he did risk reversals. And he did risk reversals when Yahoo was trading 400. When he got his stock, when he sold his company at the top of the bubble there. And that's how he made his fortune, because if he had to wait until the restrictions were lifted to sell his stock, Yahoo was $12. So the risk reversal was the greatest tool in the world that he used to accomplish all his cash, and it was exactly like you just described, John. He got to a point where the stock made a run up, he sold the call, and he bought the put below.
Admiral, his company was broadcast.com.
Broadcast.com, right.
When he started with $5 grand, $5,000. I think he cashed out about $1 billion.
Yes.
So his idea was, I don't want to be that poor again. Wherever it is, I want to lock it.
And that's what he did. And at the time he was doing this, I had a cousin that was trading in Yahoo, and he came to me in my pit and says, "What do I do?" I says, "He is giving you free money, okay? All you got to do is hedge the rest of the risk." And I showed him how to hedge the risk on all these risk reversals. Because what's happening, remember, if he's selling a call and buying a put, the market maker on the other side is buying the call, obviously, right, and selling the put. Well, if that's happening, what's a good strategy against that? Sell the stock, or buy a higher strike put, or buy a higher strike call. There's all kinds of strategies that I gave him that he was able to implement where he locked up enormous amounts of money, because when they were doing the risk reversal, he was giving away dollars to be able to lock in, obviously, millions. So it was a great opportunity for all the traders in 2000 to be able to take advantage of that opportunity.